Welcome to Money Catalyst. Today, we learn to grow up and manage your money. Number 7, financial literacy starts with understanding how money works. Everybody wants to sell you something. Businesses go out of their way to make their products appeal to your emotions and convince you to buy what you have no use for. Ads pop up everywhere to tell you how much your life will change if you get a product or subscribe to a service. Marketers have a significant influence on our culture and taste. They strategically make us accept specific standards that are unreasonable when observed logically. As a result, many people have come to believe that expensive cars, clothes, and gadgets are the accurate measure of success. They say if you are self-sufficient, you must drive a nice car and spend lavishly. However, in trying to meet these unrealistic expectations that have become a standard in our society, many people have gotten themselves into debt up to their eyeballs. If you want to become financially independent, you have to stop thinking like everyone else and start becoming more deliberate about your choices. The simple truth is, if you keep buying things you don't need because you feel they are in vogue, you will find it hard to build wealth. Don't let devious marketers and advertisers turn you into a consumer. Stop thinking like a consumer and start thinking like a unique human with dreams and values that matter. You will only gain control of your money when you learn to spend it solely on things that matter to you. Being a grown-up about your money starts with figuring out what matters to you and spending your money in line with it. People who don't spend in line with their values wind up striving to live up to unrealistic standards and never do what they need to do to attain financial freedom. This summary will help you discover the secret of money and how you can start paving your way to financial independence starting today. Remember to smash the like button, follow, and subscribe to help our YouTube algorithm. Number 6. Building wealth will require you to spend your money more smartly. The primary thing you need to understand if you want to become financially independent is how money works. According to Sam Beckbessinger, there are 3 simple things the wealthy teach their children about money, and those are the things you need to know. Here they are: how you save money, assets; how you grow money, compound interest; how to protect your investments, diversification. Now, let's take a closer look at each of these keys to financial freedom. The amount you save is the most critical part of being a grown-up with your money. The first thing you need to internalize about wealth is that no one can earn their way to financial freedom. Unless you land in a financial windfall or have a genie at your command, if you want to be wealthy, you have to save. Having all the money in the world won't necessarily lead to wealth if you don't save a portion of it. On the other hand, if you have the discipline to save more of your salary, you can attain financial freedom even if you're not earning a lot. Now it's time to get familiar with your cash flow. Your cash flow is made of 2 things: income, money in; expense, money out. People whose expenses are greater than or equal to their income are, as Sam Beckbessinger puts it, wage slaves. Even if a wage slave earns $1 million monthly, they are always a paycheck away from going flat broke. They live from paycheck to paycheck. Once wage slaves run into a problem with their paychecks, they resort to borrowing money, which leads to debt and takes them even further away from financial freedom. Another thing you have to be familiar with is your balance sheet, which also comprises of 2 elements: your properties, assets; your debts, liabilities. To classify something as an asset or a liability, ask yourself, will this put money into my pocket, an asset, or take money out of my pocket, a liability? Your net worth is the difference between your assets and your liabilities. To build wealth and carve your path to financial freedom, you have to spend less than you earn and save the difference by moving it over to your balance sheet. That is, by using it to reduce debt or buy an asset. In a nutshell, it doesn't matter how much you make unless you're keeping a lot of it and building up a healthy asset base. That's how you get ahead. Number 5. Grow your money by making it work for you to make more money. American investor and business tycoon Warren Buffett famously said that people who don't learn to make their money work for them will work till they die. The truth is, most of us are only taught how to make money and spend it almost immediately. We need to be made aware of the fact that our money is a tool to make more money. This is why most people often spend their whole life toiling without attaining financial independence. If you want to build wealth, you have to take a page from Warren Buffett's book. That is, you have to get to the point where you are earning money while sipping a cold pina colada on a sunny beach or while having tea with your mom. So how do you get to that point? How do you get your money to start working for you and making more money? Welcome to the world of investing, which brings us to the second secret to wealth creation: grow your money. When it comes to money, the most powerful force is compound interest. Here's a question for you. Would you prefer to be given $1 million in cash today or be given a penny that doubles every day for 30 days? It sounds like $1 million would be the better way, right? Well, it's not. If you took one penny and doubled it every day for a month, by the end of day 30, you'd have over $5.3 million from one tiny little penny. That's the power of compounding. So compound interest is all about your capital, the amount of money you put in. The term, how long you can let the money grow without touching it. The rate, how fast it grows, and the compounding period, how often the growth occurs. Every year you wait to start saving, it costs you much more than you think it does. It's important to understand that when we talk about saving money, we're not referring to simply putting it in a bank account. If you leave your money in a bank account, it's like lending it out without receiving any interest in return. The bank will invest your cash and only give you a small percentage of the return as annual interest. The best way to put your money to work is to invest in equities, stocks, bonds, and financial endowments. You can also invest in property or gold. Number 4, keep your money safe by diversifying your investments. Once you've learned to save and grow your money, the next step is to learn to keep it safe. As soon as you dip your foot in the world of investing, you'll hear people talking about risk a lot. You'll most likely tell yourself, hell no, I'll never put my hard-earned cash into something risky. You'll think about how much you'll be at peace if that money is stored somewhere safe, like in the bank or under a mattress. Unfortunately, while it seems like putting your money under your mattress is a great idea, it is probably the most dangerous thing you could do with it. Not because it can get stolen or shredded into pieces by rodents, but because of a little thing called inflation. Inflation is a decrease in the purchasing power of a currency, shown in a general rise in the prices of goods and services in an economy over a period of time. If your country's economy gets hit by inflation, the value of the stash you have under your mattress and in your walls will plummet, and you'll be left with nothing more than pieces of paper that are barely worth anything. One of the riskiest things you can do with your money is not invest it. The thing is, you can't see into the future. Neither can the fancy finance guys on Bloomberg or CNBC. So one of the smartest things you can do with your money is to diversify your investment portfolio. What this means is that you take lots of small bets instead of gambling all of your money into a single thing. It's less risky to own a portion of 100 businesses through stocks than to own the whole of one business. Not a lot has to go wrong for one company to fail, but it's highly unlikely that 100 companies would fail all at the same time. The more you can diversify your investment portfolio while still keeping your costs low, the better. In essence, you don't keep your money safe by avoiding risks. You keep money safe by diversifying. You can diversify across industries, countries, and asset classes. Did you know? There is a very high chance that inflation will only increase over your lifetime. So, if you don't put your money to work through investments, its value will simply decrease every day. So that was a lot. And this video is getting too long, and I can already hear you yawning. But it is time to grow up and manage money, so I will finish this in part 2. If you really plan to grow up and manage your money, check out part 2 in the link below or in the up corner. I will be waiting for you. But wait, smash the like button, subscribe, and turn on your notification to continue this money-making and finance management journey. See you in part 2.